We also see at Maple, like we see a lot of the large players right now are also launching these types of products, right? So I would expect over the next, 6 months, to see a lot of this come to life, right? And for a lot of this to become clear to sort of like the full market in terms of how these DeFi products are going to end up in the hands of hundreds of millions of users.
Nothing said on 0x Research is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and any views expressed by anyone on the show are solely our opinions, not financial advice. Boccaccio, Ryan, and our guests may hold positions in the companies, funds, or projects discussed. What's up, guys? Welcome back to another episode of 0x Research. Today, I'm joined by Carlos from the research team and Martin, head of growth at Maple. Thank you for joining us, Martin.
Yes, yeah, great to be here. Thank you for inviting me, and they're really excited to dive into all the topics of today. There's a lot of good things to cover.
Yeah, we're also very excited. I'm very happy that I brought on Carlos as well, who has been working on Maple for some time. So I think this is going to be a very good pod. But maybe before we get started, for people who may not have kept up with Maple, do you want to give a short introduction on what you guys used to be and what you guys have become over the past 2 years, 3 years now?
Yes. Yeah, so Maple is one of the largest on-chain asset managers. So we manage about 4 billion in assets, and we're very focused on stablecoins and generating yield on stablecoins. And we do that by, the core strategy we have, and we've now been running since in the last 3 years, is over collateralized lending to institutional borrowers, and that's really the niche that we've carved out for ourselves. And in that area, we're now the largest on chain and the second largest overall in terms of over collateralized institutional loans in the crypto ecosystem. So we issue, USDC, USDT loans against, Bitcoin, Ethereum, Solana, sort of like blue chip collateral, hyper liquid as well, which, I'm sure we'll get into. In the story of the day, right? Hyper liquid, a lot of exciting stuff happening there. And yeah, we have partnerships with, all the leading DeFi protocols, right? I think Aave, Morpho, Pendle, Sky, Spark, Athena, like, pretty much all the leading DeFi protocols, as well as some of the Solana players, Camino, Jupiter, Fluid. And then, we're currently very focused on expanding in fintech, working with neobanks. And that's really what we see sort of as the next frontier of DeFi. DeFi sort of breaking out of its shell and, finally getting mainstream adoption. And I think 2026 is the year where we're going to see a lot of the early signs of that. And then I think, over 2027, we'll reap, the fruits, and we'll see a lot of growth from all angles.
Martin, maybe this is a basic question, but when people think about Maple, they may think of a lending protocol, and you describe it as an on-chain asset manager. I'm curious, like, what is the difference between just on-chain asset management and what you see broadly as just lending? And how does Maple fit into that space?
Yes, definitely. Yeah, I think to your point, like when most people hear lending protocol, they sort of think of, everything fully on chain, right? So you take in stable coins, and any borrower permissionlessly can sort of take out loans and post collateral, and then the collateral could be borrowed again, right? In some cases, there's on-chain oracles, on-chain liquidators. So that's sort of a typical lending protocol, right? Aave, Fluid, Morpho, Camino. Of course, there's different takes on whether you want to do it sort of monolithic or whether you want to have isolated markets, and there's different design choices. I would say where Maple really stands out and why we don't consider ourselves a lending protocol is that we really have an institutional flavor. So yes, we do have an on-chain protocol, right? Like all of our loans are managed in the Maple protocol. They're issued from Maple vaults to borrowers. But then there's also additional things that we do on top of that. So the collateral is held in institutional custody. We KYC and underwrite all of the borrowers, right? So it's permissioned borrowing only, where we underwrite their balance sheets. We look at the quality of the counterparty, and we only work with sort of the best counterparties there. We sign legal docs, right? So we have real recourse on the loans, and also for the borrowers, right? They have certain guarantees there. So yeah, there's a lot of additional things we do on top, And then besides that, the reason we say asset management is because yes, institutional lending is our core business, but there's also the potential for other strategies, to be added to the mix, and for other strategies, to generate yield on stablecoins. So that's the reason, we're really positioning ourselves as an on-chain asset manager, and we think that on-chain asset management this has a lot of benefits. Over time, every asset manager will become on-chain, right? In the same way that at some point, every company became an internet company. But I think for now, it's really, differentiates us from sort of traditional asset managers in terms of, proof of reserves, transparency into the strategies, being able to follow, the flows on chain, receiving a vault token, right? Like when you deposit, having the ability for, fintechs, for example, to offer products in a non-custodial way to their users, right? Where their users are really custodying the assets. So yeah, there's so many benefits. Happy to get into all of them, but there's there's a real power in on-chain asset management.
Yeah, I really like that. And one of the things I like about Maple is the vertically integrated strategy and the opinionated decisions you can make about risk. For instance, you can see it on the high quality collateral that you guys have backing the loans, which is like 75% BTC, which is something that you just don't see on like normal lending protocols. And I imagine that's somewhat easier to underwrite as a lender if you know that 75% of what you're lending against is just Bitcoin, right? That must be a lot simpler. Um, let's talk a little bit about, just stable coins and the market timing generally. Like, why do you think that stable coins are still like growing while a lot of DeFi still feels very quiet?
Yes. Yeah, you're getting to the heart of sort of like where we are in the cycle, and to your point, like one of the most important questions right now. So I would say there's a real world outside of DeFi, right? Like when we're sort of in DeFi, it's very easy to sort of like think in the constraints of DeFi, and think in the constraints of, DeFi users and protocols, and, people having to create wallets and sort of like to be able to interact with DeFi apps. But I think there's this whole new parallel world out there, which, USDT has always tapped into, right, for a few years already. But I think, USDC and other emerging stablecoins are really tapping into that right now, which is actual real users using stablecoins in everyday life, right, for payments, for saving, to receive their salary, and to just really run their life on stablecoins. And I think we're seeing a lot of that right now, and adoption there is going very fast. I was talking yesterday, for example, with Red Dot Pay. They're growing massively in especially Latin America, where for users it's a real benefit to use stablecoins over sort of like the local currencies. They can pay everywhere with it now. It protects them from inflation, right? They get access to all these new financial products that they previously didn't have access to before. So yeah, I think there's this real parallel world going on, which is completely different from DeFi, where mainstream consumers are actually starting to use the benefits of stablecoins. And stablecoins is just a leading indicator, right? Like you can never use Maple without a stablecoin. So the first step is to have the financial world run on stablecoins, and then the second step is all these new products that are unlocked with stablecoins. And yield is typically not the first product that people think about, right? Typically, the first product is more, payments and sort of being able to use it in real life. Trading, payments, those are typically the first things people do. But then yield is a very natural follow up from that, right? As people get, the beginning, people typically don't switch over their whole life, right, to the new solution. They sort of have their traditional bank account, and then they open up, like a neo bank account or fintech account or wallet, and they start running part of their life from it. But then over time, as they build trust, as they build confidence, as they see all the benefits that it creates, they will start moving over more and more of their assets to this new solution. And then yield becomes very important, right? Because you don't want to then have, half of your net worth or, half of your savings sitting idle, doing nothing. So I think yield is sort of the next step in that evolution. But it's extremely encouraging to see that crypto is finally living up to its promise, right? Which is, all these beautiful real world use cases.
One thing you mentioned there that was interesting is like this trust aspect of people move slowly into on-chain yield their stable coins and then slowly build that up. Um, I'm curious when you see that happening fully. We still have I mean, the Aave RSE stuff is, I guess, the most recent thing, but we've had other exploits. I wouldn't call that one an exploit, but like, we've had other issues with lending markets. We've had other issues with yield markets. How do you see this shift away from like traditional financial tools towards on-chain, given that you can get reasonable yield on TradFi right now compared to on-chain?
Yeah, that's a key question. I think a big part of it will be, people trusting the platforms they already use, right? And those platforms giving access to these DeFi products. So, if you go into your favorite neobank app, and just the one you're currently using, right? And there, you could use a DeFi product or a DeFi platform. Like that would be a big differentiator, right? You would trust it a lot more because it has been vetted by the platform. And so I think that's going to be very important. And we also see at Maple, like we see a lot of the large players right now are also launching these types of products, right? So I would expect over the next, 6 months, to see a lot of this come to life, right? And for a lot of this to become clear to sort of like the full market in terms of how these DeFi products are going to end up in the hands of hundreds of millions of users. There's always sort of the DeFi niche, right? There will always be just people that are very passionate about finance, that spend a lot of time in their portfolios, right? That will continue to use DeFi because there's just more opportunity, right? Like in a large neobank is not gonna make available, a 10% or 15% DeFi loop, right? That is just not their business. But those loops are still gonna exist, right? I mean, they're gonna be here a year from now, 5 years from now, 10 years from now, right? There will always be these new novel opportunities. There will always be new protocols, new assets launching. There will always be opportunities. So of course, more during bull markets than during bear markets. So I think there will always be a cohort of just DeFi power users that are going to be using these types of products like on-chain. And, they might leave temporarily, but just for the love of the game, right? They're going to come back. And then I think it will also become more and more institutional. So there will be, you're already seeing a lot of market neutral funds, right, who are running sophisticated DeFi strategies. I think that's only going to grow. And, we'll see ultimately all finance move on chain, right? Like I saw the other day that, there might be sort of a green light for tokenized equities coming on chain. I mean, that is going to be huge, right? We're seeing hyper liquid take off. Right now the volumes are not big enough for, the Citadels and the Jane Streets and, these types of companies to really, put like full teams on it for like arbitrage and things like that. But all of that is going to come, right? As these products scale, as more and more liquidity flows into it, these types of teams are going to put more and more resources into it. And that's only going to make the markets more efficient, more scaled out, and much more accessible for normal day users. So yeah, I think all of those things are really finally coming together. Yes, these hacks they lead to we have to explain it, and of course tell to our counterparties why Maple security is top notch and things like that. But it's also in some way, if you look to the actual things that are happening under the hood, right? It's not that a smart contract that was existent for 3 years suddenly got hacked, right? There's typically very clear reasons why it happened, and there's also very good ways that we can prevent these types of things by investing a bit more in security, having more layers. So I think in general, like all these things are solvable, and we'll work through them. I haven't really seen it decrease institutional interest.
Yes. And then one thing that we kind of brought up a few times is this idea of fintechs moving in. Do you see Maple sitting on the back end of that, or do you see Maple launching a consumer-focused product as well?
Yes, yeah. So great question. So kind of the way I think about it, there's kind of like 4 layers right now. And Carlos and I, we actually had a really good discussion on that a few weeks back. So, you kind of have like the fintech, right? Call it like a financial, like I like to call it financial super apps, right? And right now you got crypto exchanges, Coinbase, OKX, Binance. Then you have like, sort of like the fintechs, right? Which is like Robinhood and Revolut and these types of players. Some of them have banking licenses, other ones are getting them. Then you have, large crypto wallets, right? MetaMask, Phantom. And ultimately, if you look at all these players, like they're all are sort of like setting themselves up for the same end game, right? Which is, be a financial super app where users can just do all of their financial life, right? Whether that's, receiving their salary, whether that's trading, whether that's yield, whether that's payments, prediction markets, right? Like, and all of these things, options, right? All these players ultimately will have like that full product suite, right? The ones that keep growing and so that's sort of like layer one. Then layer two is more like the infrastructure, right? Like the vaults, like Morpho is a really good example there. Veda, there's other players, and they typically then get integrated into these players, right? And they receive the capital in to then allocate it on chain. Then in some cases you have a third layer, which is the curators, right? Depending a little bit on the model. Most of the time, that's the case, right? Morpho, you of course got the curator model. They sort of invented it. And then, Veda, I got like a vault manager, right? There's different words for it. And essentially what they do is they are responsible for taking in the capital and allocating it across opportunities, right? Whether that's directly into lending markets or whether that is in assets, right? Such as Syrup USDC. And then at the bottom layer, so sort of like the fourth layer, you have the asset managers, the players who actually generate the yield, right? And I think that's really where Maple sits. So we are actually partners with the infrastructure players, right? Like Morpho. We're partners with the curators because they need places to allocate the capital, right? At scale. They need places to actually generate the yield on the stablecoins. And, right now there's like a few strategies that have really been proven out at scale. Institutional lending is one. You got permissionless lending on chain, right? Is another one. You got the basis trade, right? That Athena has really pioneered, which of course works very well in bull markets. In bear markets, there's a little bit less opportunity, right? But they're still able to deploy scale into that. And there will be more and more opportunities coming on chain, right? There will be some RWAs, there will be on chain native opportunities. So yeah, I think that is ultimately the way it's going to play out. And these players need players that generate yield at scale in a properly risk managed institutional way.
I mean, I guess there's a lot to unpack there, but one thing I would like to ask is when you define like the four layers, it's interesting to me because you mentioned that Maple is sort of complementary to them, but in my opinion, or it feels like it is also like a competitor to some of those layers, if that makes sense. Like, would you say that Maple is competing to some extent with Vault curators today? Uh, Call it Steakhouse, Gauntlet, etc. Like at the end of the day, they are on-chain asset managers themselves, no? Just in a different capacity as Maple. Could you talk to us a little bit about like those competitive dynamics?
Yeah, that's a great question. So I would say, at this stage, that there's a few things, right, that we look at. So number one is that the pie is growing, right? And DeFi right now is extremely small. So it's really important for all players to work together and try to capture this massive opportunity, right? Instead of infighting. And that's why I think there's just a lot of partnerships, right? So all the names you mentioned, Stakehouse, Gauntlet, but also others like Centaura, we have really strong partnerships with, right? And they all underwrite our assets, they allocate into our assets, through the various lending markets and vaults that they're curating. Ultimately, of course, there's only so many deposits, right? And everybody, of course, wants access to these deposits. But there's also not a world where one player is going to manage everything, right? It's always good to have diversification, right? Especially for these curators. They don't like to just allocate everything into one asset, right? They want to have a basket of assets. They want to have diversified strategies. So I think, there's always room for many players to win, right? In the same way that in the traditional world, there's hundreds of asset managers that manage like 10 billion plus, right? So I think in general it's quite different from if you have like a search engine, for example, where it's like just winner takes all, right? Google has 80% market share, they just dominate everything. I think the asset management space is fundamentally very different because it requires real expertise, and every single strategy has a real moat around it. If you just look to over collateralized lending, right, our bread and butter, it's a real moat, and it's really difficult to get into that space, right? Building these relationships with these institutional borrowers take a lot of time. Getting these legals done, onboarding, right, building the trust, being able to allocate at size, managing the risk, right, underwriting these assets, bank setups, all the custodians, right. There's takes a lot of time to set all of that up. So yeah, I think that ultimately as an asset manager, it's important to know your game, right, focus on your strengths, and to double down on sort of like the strategies you're best at. So yeah, I think long story short, at this stage, very very much partnership driven. We think we will, it will continue like that for a long time to come. As the growth rates we're going to start seeing once these fintechs really start allocating at scale into these vaults are really going to sort of blow away anything we've seen before in the stablecoin earn DeFi landscape.
Yeah, totally. And on that point, like I recall that in the previous token holder update on Maple, uh you sort of mentioned that there was a goal to sign 3 fintech partners by the end of Q1 or Q2 this year, and that could contribute meaningful to Maple's AUM. um how do you view like the state of those like integrations or partnerships? How is that going, and could you talk to us a little bit of the challenges that maybe you have encountered when you're trying to integrate with neobanks? Maybe neobanks aren't as comfortable like with a crypto backed product, or they still have like some regulatory uncertainty. Like what are the main like challenges that you have today?
Yeah, so in terms of those goals, that's spot on. And I would say, watch this space, right? Like we're gonna see some big announcements coming pretty soon around all of this. It always takes more time than you want, right? Like in DeFi BD, it's very much like, okay, you get on a call, you agree to something, you launch it the next week, right? And I'm exaggerating a little bit, but like that's roughly it. In the traditional space, the fintech space, it takes a lot more time, right? To your point, there's the legal teams that need to look at stuff. There's regulatory concerns. There's operational due diligence, right? And these companies take a lot of time to work through all that, and they should. I mean, these are very important things. Making financial products available to users is like deserves a lot of diligence. So in terms of the biggest roadblocks, like it really depends, of course, per player and per category as well. But I would say the top three that we have seen so far is number one is sort of infrastructure and operational readiness. Right, like these financial institutions, like you know everything they've built over the last, could be a decade if they're more sort of neobanks, fintechs, or it could be decades when they're more traditional banks. Like all of that infrastructure is just old and it's completely incompatible with crypto rails, right? So they have to sort of, rebuild this whole crypto architecture on the side, but then they have to integrate it with all of their existing systems, like that is challenging. So that's where we're then partnering with players like Zero Hash and others that sort of like offer those solutions, quote unquote, out of the box, right? But out of the box, right, it still takes time to implement and things like that. So like that's one challenge. So even if they want to launch crypto products, and almost all of the ones I've spoken to see the need to launch all of this, right? So the time 2-3 years ago when we spoke to these players and they didn't really know what crypto was, they didn't really know what a stablecoin was, and they didn't really see the need to launch anything. Like those times are over, right? They all recognize the need to do something. But so that's a hurdle. Then to your point, the regulatory one for sure too. There's many different approaches, jurisdictions, and things like that. But just in short, yes, like that's something that that is ultimately extremely important to these players, right? They have to be compliant. Just an absolute boundary condition. And then I would say the final one is more like a time component, right? Like once those two things are figured out, it just always takes more time than you want to launch these types of partnerships. But it will happen, right? It is gonna come, and we'll see a lot of growth. So the players we're focusing on right now are more the ones who have an existing crypto business, right? They sort of have these rails set up, and then making sure, of course, that the regulatory picture is like fits well, and then to launch a product.
Perfect. I actually wanted to go a bit into the yield product, Carlos, if you don't have any follow-ups here.
No,
Okay.
go ahead.
So feels like we got a decent understanding of where Maple sits in on-chain DeFi and DeFi. And also like your strategies in terms of onboarding with fintechs. But what is, I guess, exactly the product that Maple offers? And then maybe we can dive a bit more deeply into how it differentiates itself from some of the other products that are offered on chain.
Yeah. So right now, I'd say we have SERP USDC, right, which is our flagship product, which is essentially a vault that people can deposit USDC into, and then they receive. Currently, the yield is roughly 5%. So it's typically about 150 basis points above lending protocols, so 1 to 1.5%. And we generate the yield fully by this institutional lending strategy that we just walked through. So we either put in institutional loans, or we have a reserve that we just put in T-bills, right, to sort of facilitate liquidity to users. So that's the current product that has proliferated itself all throughout DeFi. That also has integrations into many wallets and some of the exchanges. The other thing we're building right now, which is very attractive to fintechs in particular, is the ability for sort of fintechs to dictate some of the strategy, right? So I think, Carlos, you highlighted that earlier, where you said 75% of your collateral is Bitcoin. That's really attractive, right, to these players, right? They really like Bitcoin. They all understand Bitcoin. They're comfortable with the risks, and if they see other crypto coins, they might be just a bit more risk averse, right, and be like, okay, let's just only do Bitcoin backed loans for now. So that's then something we can offer tailored to these fintechs, right, where they get access to a specific part of the loan book in that sense, which they're comfortable with, right? And there might be other players who say, listen, I want higher yield, right? I want only ETH backed loans and Sol backed loans, for example, right? Which will be higher yield than Bitcoin backed loans. So, but in short, so it's a bit more modular, right? We call it modular strategies, where these partners can sort of pick and choose what they want, because they all like to be in control, right? And that can then also be with the stablecoin of their choice, right? It doesn't even have to be USDC or USDT. Like if they want another stablecoin, if they issue their own stablecoin, right, we can work with that.
I think that makes sense. I actually, Carlos, 1 second, I'm gonna let you have a follow-up. But we had a chat with Sam from Spark. Carlos wasn't on that one, but last week, and one thing they mentioned was this idea of, like, I guess, less risky asset management slash curating. That kind of sounds like the BTC thing as well, right? Like you're just giving these institutions what they want. Do you see institutions becoming more and more risk on going forward, or do you think a large part of your work is going to continue to be in stablecoin allocations and BTC allocations?
Yes, yeah, I think it's a great question. I would say in general, like most of the opportunity on the lending side is also in Bitcoin backed loans, right? So it's really marrying like the two sides of the market together in a very elegant way. There's most demand on the supply side as well as on the borrower side. In terms of risk on, I think it's less a matter of risk on. It's more a matter of time and track record, right? So as time goes on, these players are going to get more and more comfortable with Ethereum and Solana, right? like I don't necessarily think that Ethereum and Solana are much more risky, in the sense of how we're managing it, right? Like we have different LTVs, obviously, for ETH and Sol-backed loans to account for the higher volatility in ETH or Sol. But in principle, it's very much the same structure, right? And we will underwrite it against the liquidity in the market and all of these things, right? So in principle, in terms of risk management, right, like we think it's the same level. But I do understand institutions who say, listen, like I just prefer Bitcoin. Even I understand your reasons. Let's just start with Bitcoin. So and that's very wise, I think, as well from these players, and it makes a lot of sense, to because there's typically also different opinions. When we say an institution, it's not just one voice, right? Like there's some people who really want to do it. There's some people who risk averse. There's different teams, right? So it's also a way to sort of get them comfortable internally, and then over time we'll launch more strategies. So definitely, I to answer your point directly, yes, they will make more and more strategies available. And I think we're seeing that with Robinhood, for example. Like what they've done so masterfully is making options available to retail, right? In a way that's super friendly, right? And super easy to understand. So I think in general, this whole trend of financial empowerment, giving choice to the user, is only going to continue, right? As people just get more and more educated on different financial products. So I would expect that, these players are not just going to offer, one very simple yield product and call it a day, right? They're going to offer different options and, create more and more choice over time, right? Like they're not going to offer, the most degen strategies, but, there will be a nice middle ground.
No, totally, totally. I totally agree with that. Speaking a little bit about the market right now, I know that borrowing demand has been like somewhat depressed over the past few months, maybe after 1010 especially. Um, has institutional borrowing demand improved in the past few weeks? I was checking Maple's Dune Analytics dashboard, and it seems that for the first time in months, syrup USDC utilization is back near 100%. And it seems like on-chain yields are rising a little bit, which is encouraging. But I imagine you're in a privileged position to see like demand for leverage. So could you talk to us a little bit about where you see the market right now in terms of that borrowing demand picking back up?
Great question. Yeah, you're right. Like we're really in the middle of that, right? Like we're very good pulse in the market. So I would say it has picked up a little bit. So we have issued a couple 100 million in loans in the last few weeks, which is a great sign. It hasn't been like a very strong and sustained pickup yet, right? Where sort of like our phones are running red and everybody is calling for loans, right? I mean, we have had those environments too. So I would say we're sort of cautiously optimistic on the trend going forward. And I do think that in general prices don't really reflect the reality of what's happening under the hood, right? I think there's just a lot of excitement about the AI trade, and a lot of people got flushed out in crypto. So I think there's sort of not many people are paying attention to what's actually happening, right? A lot of the tourists have left, and even a lot of the crypto believers are sort of like focused on AI right now. But if you actually look to real product adoption under the hood, and some of these big partnerships that are gonna come live over the next few months, I think there's a lot of things to be very optimistic about.
When you think about like these partnerships, right? Because this is something that I've been thinking about, but Maple has like this yield bearing product, right? Which is Syrup USDC and Syrup USDT. At the end of the day, the function of that is to have like capital sourcing so that you can then allocate that to loans, correct? Uh, when you think about like a partnership with, let's say, a Robinhood, like nothing is stopping you from like issuing like a white label yield bearing stable, if that makes sense. Like let's say a hood USDC, and then people on Robinhood would allocate to that, and you could get capital sourcing from that source. Like how flexible is Maple when it comes to like this partnerships with neobanks? Does that make sense?
Yes, yeah, great question. And to sort of to your point, like if there's a fintech who says, listen, we have not USDC, not USDT, but our stablecoin is USDG, right? Just as an example. Then we could say, okay, we launch a product for that, right? We launch syrup USDC, and we generate a yield on that. And the question is, are borrowers going to want that asset, right? And there's different answers to that, right? So one option would be to, there might be some institutional interest, right, depending on the counterparty. I think if you look to the global dollar network, for example, there's a lot of institutional players involved, right? USDG. So I'm sure for that asset, right, that there could be real institutional demand. But there's also other options, right? So it could be lent out to the fintech users in their own ecosystem, right? If they want to make credit available to their users, if they want to have their users, give their users the ability to borrow extra crypto, right? Like they could also, do that, and we could deploy into that. Or in some cases, we might convert some of those stablecoins into other stablecoins that we could lend out, right? But then the user could still put in USDC, right, into that product. So I think there's a lot of different ways. This is definitely one of the ways the market is going to develop, right? You just see that the large, ecosystems, the really large players, they like to control their own stablecoin, right? They like to issue their own stablecoin. We have seen many players do it, right? Deal, Klarna, the Western Union, right? Like the list is very long of players who are either doing it or have done it. Many players have spoken about it, right? Even traditional banks like Bank of America, right? They've spoken about it. So I think there will be many stablecoins in the future, right? It's definitely not just going to be USD, USD. And as Maple, like we're positioned to work with any of these stablecoins that are interesting, right? Like we won't just work with anyone, right? There has to be some real traction and ecosystem behind it. But that's definitely the intention, right? That we can take many of these stablecoins in, we can earn a yield on them, either the same strategy or other strategies, also depending on the preference of the partner.
Martin, I wanted to ask about how you see you guys growing apart from fintechs. I guess my question's a bit, one thing we mentioned is like a lot of this demand is going to come from, this borrowing demand is going to come from fintechs. And then if we're not doing that, like if people just want to use TradFi products in the real world, then you still have people who want to use Onchain, like for looping, etc. I'm curious if like how you divide up your personal day, week, month responsibilities in terms of like courting institutions versus trying to figure out ways to make maybe like the 5 to 10,000 people remaining on chain.
Yeah, you think there's still that many?
Maybe not.
No, for sure. Just joking. But yeah, so the way I think about it, there's sort of like four buckets, in our head, and the way that we divide up the go-to-market team. So one is DeFi, one is CeFi, which is, more like the exchanges, wallets, things like that. Then one is FinTech, one is TradFi. On DeFi, to your point, that's our bread and butter, right? That's where most of our growth has come from today. That's where we're very strong. We definitely don't want to give up on that market, right? It's still very important. And we also think that DeFi will make a big comeback, right? Like DeFi is not just going to die out and leave, right? Like it will be a flourishing ecosystem. And there's just many advantages that it brings. It just will be that not everybody is going to make a wallet and use DeFi apps directly, right? So if you want to use the hundreds of millions of mainstream users, then just launching a DeFi app and hoping people show up is probably not the right strategy, right? But as we spoke about earlier, there will be many sophisticated players, and there will be a lot of capital in there that Maple will be very well positioned for to capture. The number two is more CeFi. Now, over time, I think CeFi and FinTech are going to merge, right? Like right now, it's still a little bit separate, but over time, it's all just going to be FinTech. But right now there's still a clear separation because the CeFi players are just like very crypto native. They understand crypto. They're typically more risk on. They're more comfortable with these products, right? They understand them much better. And many of them already offer yield products, right? So yeah, we want to continue growing market share there, getting integrations, things like that. Then FinTech. The reason why we're so excited about FinTech in particular is because, FinTech has disrupted TradFi, right? So FinTech those FinTech businesses are very innovative by nature because otherwise, like they wouldn't have had a business. So that's why I think that fintechs are going to adopt crypto much faster than TradFi. So a lot of players are very focused on TradFi, and I think again there's massive opportunities there, but it's just going to take way longer than for the fintechs to adopt it. So sort of the evolution of Maple's strategy has been become very big in DeFi, right? We're now one of the biggest players. Keep that dominant position, right? We don't want to forget about that. Then take CeFi, right, and work with a lot of the CeFi players. Then fintech, then TradFi, right? That's sort of like the really natural evolution for how we think things are going to go. And one thing I've learned as sort of in my seat over the last 4 years is that in growth, like you should always focus on what is your next 5 to 10x, right? Like when we as Maple were at 0, it's all about getting your first 10 million in. And doing that is an extremely different process than going from 10 million to 100 million, which is very different from going to 100 million to a billion, which is very different from a billion to 4 billion where we are now, which will be very different from going to 50 billion, right? Which is our next goal. So that's so you always need to sort of evolve and be like, what is the next big pond of opportunity? And from our perspective, that next big pond of opportunity is the fintechs.
You've talked a lot about growth and distribution and like how fintechs play into this. I would love to dive a bit more into the full stack on-chain asset manager. I know that in the previous token holder call, I don't know if it was Joe or Sid who mentioned that you were working on an on-chain originated securitization vehicle. I'm curious if you can like speak at all to those efforts and like how it differentiates from the lending side of the business.
And there should also be news on that at some point. But I would say that Maple, we have always pioneered these like institutional credit products, right? And it really started with loans that are ultimately quite simple in nature, right? Issue a loan, take collateral. It's quite a simple arrangement. And these securitization vehicles are sort of like the next evolution of that. And also, what we discussed earlier around the a lot of these fintechs sort of wanting their own stablecoin in their own ecosystem, right? You can imagine that Maple can also be a great partner there in terms of on one side earning a yield on the stablecoin, having a securitization vehicle with such a player that then generates the yield on the stablecoin, right? So it like sort of like stays in the ecosystem. So yeah, the securitization vehicle is really an opportunity to work with a high quality counterparty that does a lot of over collateralized loans, right, to their user base. Those loans might be 10K, 100K, right, 500K. And for Maple, it would be too much to like underwrite every single loan, right? So then we essentially lend into that vehicle, and the counterparty then sort of like issues each loan, right? And there's sort of certain setup in terms of like how we manage the collateral. So that's sort of the innovation there. I think that will also be a scalable proposition, right? We see a lot of these more retail focused lenders, right, that have the need for such a vehicle. And this is also a very common structure in TradFi, right? Especially in private credit and sort of like these areas.
Fantastic. I have two questions. Typically I think because you're in lending, I think both of these work. So I'm gonna ask actually 3 questions. One is, what is something that you regret over the past year in terms of Maple? The other is, what is something that you really, really are excited about over the next 6 to 12 months for Maple? Although we've chatted about that quite a bit, but maybe there's like one that you really want to single out. Maybe something that you individually played a lot of role in, so that everybody knows.
Yeah. Yeah. And regret is like a personal regret or like a company regret that we have?
Either works. Yeah, either works. I think typically people mention that they spend too many resources on one thing instead of should have focused on another one, just to like set a general thing.
Yeah, I think like one of the things, as I'm like managing a team, I think it's talent is very scarce, right? And like I'm very blessed to have an incredible team now. So I think I would try to look at everything a little bit more through a talent lens, right? Of like, who can we recruit? As we're sort of like in this hyper growth phase, it's who can we bring on board that is truly exceptional, has the same values, the same mission, right? Like finding these types of people are really exceptionally important for a business. And I think we have an incredible team at Maple. But I think that sort of like always looking with that lens is something I've learned recently, which just always be on the lookout for great talent. And then on the company side, I would say I think the resource point is good. I mean, I think realizing that fintechs are going to be the next frontier is something that I think I sort of realized in October last year. Before I kind of knew about it, but that was the moment like the light bulb like really went fully on. So yeah, it's you always prefer to realize these things earlier, but sometimes like that's just how life goes, and you should be grateful. You realize it in time enough to now have a couple of these big partnerships lined up.
Yeah, love that answer. I guess this is a good place to close it out, but first I want to give you the opportunity to tell to people where can they read more or learn more about Maple? Anything they should be on the lookout for over the next few weeks?
Yeah, so maple.finance is the website, and then on Twitter, Maple Finance. So we'll post all of our updates there, and definitely be on the lookout the next couple of weeks for a couple of exciting announcements. And it's great to be here. Thanks for inviting me. It was a really cool conversation, and I think if we look back on this a year from now, then we'll recognize sort of the success and the way that fintech and crypto is merging.
No, always a pleasure, Martin. Thanks so
Oh,
much
it's
for
always
joining us. And Boccaccio, the last
Ciao.
words.
No, I was just gonna say thank you for joining.
Perfect.
Okay.
Thanks, guys. Appreciate it.